Good morning. This is the weekend update for Buy Sell Short for Saturday, April 5th. And we're going to do something we don't usually do. Start off with the Nasdaq chart. And really, the reason we're doing that is because the Nasdaq is driving the ship right now in the market. It is the area of extreme weakness that has just sent everyone to the sidelines. Specifically, the mega cap biotech stocks have been leading the downward move, and that's kind of spread over to the other high beta names like Netflix, Tesla, Amazon, Facebook, etc., LinkedIn, those kind of plays. The mega cap biotechs, extreme valuations in many of them. We could, look at some of the charts like BIIB, Biogen. I remember a couple of years ago, the stock at $50. And, in the last 3 months, it was up 33%. And these are the kind of stocks that are just getting taken to the woodshed right now. We had the Nasdaq down 100 points on Friday. I believe that's the largest drop we've seen in the Nasdaq. I've read somewhere since 2012, almost 3% drop. And these kind of washout capitulations in these mega caps are A, healthy, and B, can be fast and brutal like we're seeing right now. And they kind of spread over to the other stocks, and we've been seeing that really over the last couple of days. Stocks that have really good news, not moving, at all that well. We've talked a lot about that in the chat room, and we'll go into it a little bit more when we jump into some of the other stock plays. Support right now in the Nasdaq, you're looking at another possible 100-plus points downside before we should see some sort of bounce. Looking at the Dow Daily, Dow, S&P hit all-time highs this week, but they were kind of able to ignore it a couple of days of the week. What we've seen happen in the Nasdaq, a little bit of hesitation on ignoring it on Thursday, and on Friday things just did not feel at all right. We went and sat on our hands pretty early in the day, and then I sent out that email regarding how we were just going to be cautious and see what the market did. High cash levels, sit on our hands, and just see what is going to develop. And the market at that stage was flat, and I had remarked that the way stocks are trading, especially with the Nasdaq was down 50 points at that stage, that typically we don't see the Nasdaq down that much without seeing the Dow down 100-plus points. And we ended the session up down 160. Uptrend is still in place on the Dow. We are still above the 20-day exponential. We've got support, let's say, at 16,300. We really have a 400-point band of support if I was to, draw a line here. If we broke 16K, you'd really start to see the bears thumping on their chest with a possible downside move to the 200-day moving average at 15,700. Jobs report on Friday was okay, 190,000 jobs, but I believe this was the first jobs report we've actually sold off in quite a while. So that's a new wrinkle to consider. We also have tax day coming up in a week or so, and weakness this time of the year around tax day is not uncommon. None of the action we are seeing here right now is, out of the ordinary considering the time of the year and the extent of the early year move that we've seen. 15-minute chart on the Dow. I left that support line in. That's that dotted line that we talked about on the Thursday video. So you can see right now that 16,300 goes back to the March 17th low. So that would be our next, area of support. We've got RSI oversold. We've got MACD extreme oversold. We've got stochastics oversold. And rarely after a big sell-off that we saw, like we saw on Friday, the ideal situation the following session, especially if it's a Monday, is that we get margin calling, they flush us down another 100, 200 points, and then we get a fat rally. What's tended to happen many times over the last few months when we've had a day like Friday is they try and gap us up early in the morning on Monday. No one wants to buy the gap. Things end up being sketchy, and then we see further weakness. So let's see if we can get a sell-off early Monday. Unlikely given the charts, but you'll never know. The fear might be building over the weekend. Dow Transports, pretty decent sized down day on the Dow Transports. And if we look at other times that we've had big red candles on the Dow Transports, we typically see another decent size, 50-plus point downside move the next day or two. If you go back and look Those big candles are typically followed by at least another big candle. So let's see what happens Monday. Again, we're already playing a few stocks right now, a few nice stocks, and we'll go into that in a little bit. So no need to get worried. We're running out of plays. I mean, we're running out of decent looking, nice setups under $5 because all these stocks have just blown up recently. So a little bit of a retrace in the charts is not unexpected, and it's actually something we should welcome right now. McClellan oscillator, nowhere near indicating a bottom, so, we'll continue to monitor that one over the next few days. But anyway, let's jump into some stock plays. GCVRZs and no free rights. Boom, boom, boom. Market tanking on Friday, and our gem of a play busting out. Traded all the way up to 40 cents. I believe it was 41 cents, and after hours, chugging its way towards that first target of 50 cents. More and more traders are starting to discover the research we pumped out a couple of days ago on this little potential gem play and how the minimum value really should be 50 cents or more on this stock. After that break of 50, we're looking at 75 to $1 possibility over the coming weeks. And again, as I mentioned, this is a stock we're probably going to be playing many, many times over the next year. But what a great chart, great story. Up on a big down day, looking really, really good for us. A couple of our other swing plays. PTN, again, we're just waiting for that news on the partnership deal. Stair-step chart formation in play. We've got rock-solid support right now on the uptrend line, which is also the 50-day moving average. So let's see. Hopefully we get that news sooner rather than later, especially with the market sentiment we have out there and everyone just tiptoeing around on eggshells. One of our other swing plays, DEJ, we've got came all the way back down to the 20-day exponential at the uptrend support line. We had that golden cross, so hopefully this is the beginning of what should be a flag on this chart. On this retrace, volume has just disappeared, which is exactly what you want to see when you see a big move, consolidation happen. You want volume to die on that consolidation. That's a bullish sign. Stochastics has retraced to the 50 level, so I would love to see a rebound right here next week. Natural gas prices continue to go higher. DEJ continues to pump out news, and insiders have loaded up. So patience play on here. We should see rock solid support in this 20 to 22 cent area. AVL, one of our lithium plays, has been bouncing back and forth above stops all week long. We had a nice little pop on Friday. There was a little bit of a move on the rare earth plays, got up to almost 68 cents and then retrace. So, stops 58 to 60 cents. I'd probably say 60 cents now for stops on this play if you're still in it. Possible MACD cross on the way, but I mentioned in the chat room on Friday it was okay to book half a position on this one if you're feeling a little tentative on the market right now. Mad Cats. Now, this is the reason why I sent that email out. This is that, over the last couple of days, we've had a couple of stocks that have had great reasons, great excuses to put in big moves, and the volume has not been there, and the moves have not been there. Mad Cats monster news, I believe, came out last week. We didn't even notice it till Friday. Amazon is shipping their new gamer controller, Fire TV. It's their TV box / Mojo type online game system, and Mad Cats is the only controller for it right now. If you buy a Fire TV, Amazon will prompt you to buy a Mad Cats controller for $40, which is a discount on what the price is. Big deal, and possibly big sales for Mad Cats, and hopefully these guys will pump out a press release on it on Monday morning. But popped a couple of cents, jumped in it at 50 cents, 51 cents. It was only able to get to like 54 cents, which even though we've got the 200-day moving average resistance there, this weak market action with a perfect excuse to run was a sign that, traders are really sketchy right now and time to sit on our hands. And, the chart looks great. Positive MACD cross should come Monday morning. Stochastics look great. A press release, and we could see the stock in the 60 to 70 cent area next week. Amco was another one that had a great reason to pop on Thursday. China did a stimulus bill, construction bill, railroads, etc., low-income housing. And again, this stock just wasn't able to get the volume that you would expect to see. They posted earnings after hours on Friday. Nice little increase in it, but, stops were at 38 cents. And as I mentioned on the alert when we sent out, the fact that it wasn't moving Thursday and earnings report after hours on Friday, that it was an exit before the close on Friday, ended up closing at 40 cents. So, a flat trade, not such a bad thing, especially in this market. And I'm actually going to do another video here shortly. I'm going to send it out on how to manage positions and risk reward when you see the market doing what it's doing. That video will follow shortly after this one. But what's next week hold for us? Could see a bounce back. We're not going to make any calls. We're going to see what the market brings for us next week. Sit on our hands. We've got some very, very nice setups like GCV, RZ, and just go from there. So if you've got any questions, shoot me an email, feedback@buysellshort.com. Have an awesome weekend, guys, and see you in the chat room on Monday.